So the format here is that this is a video, but I will also have all the materials here, so if you wanna read it and not watch the video, it's here behind the paywall. That's a paywall feature. And the video is it's gonna be about 50-60 minutes. It's gonna be about 20-30 minutes free. These are the topics. So in this way it's kind of a combination. It's kind of a new innovation in Substack. Nobody's ever seen anything like it. But to the topic. So the stock is dipping and I have bought the dip pretty heavily. So I want to be right about this. So I did more due diligence and I'm presenting it here. So there will be a lot of quotes. I won't be reading all of it. You can read those ones yourself. But I will be summarizing these quotes and stuff like that. And they are from the investor call, the Spotify interview or the solar cycle interview. And yeah. So it's dipping. Why is it dipping? Because they announced a big raise at 2.75 here. And the stock was also obviously way higher, over $4, and they announced this big raise unexpectedly. And now the stock is around where they raised at. And I think it's quite a unique situation at the moment. And I think the risk reward is better than it was when I first bought the stock. So that's why I bought the dip. But we will get into that. Let's look at the raise first in detail. So their goal was to raise 30 million. And they ended up raising 46.5 million after fees. And basically the reason they gave was that there was so much demand. They upsized the raise. We ended up upsizing because we were overwhelmed with demand. At least 5x from some of the best institutional investors in the country. Many of their existing institutional investors, most of them invested bigger and stronger now. So yeah, they claim they had all this demand, and I guess when you offer such a big discount, you're gonna have a lot of demand. So I don't know, maybe why couldn't they raise a smaller amount, the goal amount at a higher price? That's the question the shareholders are asking. Now, and with the over-allotment, it's gonna be probably an extra 7 million, assuming that's fully used. And they raised about 5 million earlier in early January, late December from the ATM. And now they have over 60 million in cash without the over-allotment. But with the over-allotment, the fully diluted share count is about 74 million shares, which would put the fully diluted market cap at 204. Let's say take cash of 60 out or a bit more because of the over-allotment. It's going to be about 140 EV. So, but of course EV is not the right metric for this company because they're not going to be paying dividends or doing buybacks with this money. They are going to be investing it. So it's really about looking at what is this money being spent on and what is the return of that. So what is this money being spent on? So what they say, what the purposes they outline are in total 28 million. So 13 million for facility 2, second 100-ton facility in Nevada for solar recycling, 5 million to expand team resources platform to secure the site storage for facilities 3 to 7. So that's, I think those are valid reasons. If they want to speed those up, I think those are valid reasons to raise. Then they have 10 million for the refining solution, which we will get to. I'm kind of torn about it, whether it was really a good idea to raise for that right now. So that would be in total 28 million, which leaves 18.5 million left over with the full over allotment, 25.5 million. So excess cash. So is this just to have a better balance sheet? Was just a favor for the institutions who wanted to participate, and now they have more cash just to have? I guess that's one reason it could be. Another reason, maybe they would be spending it on Biolume, but that would conflict with their earlier statements of Biolume being self-funded. It could be for Sierra Springs. We know we have some conflict of interest there, and they just recently invested more, or at least allocated more capital into Sierra Springs, and we will get to that later. Or maybe faster build out of these other facilities, which I guess would be my preferred way they would be using this. But, well, we can see the main problems with the raise and why the market doesn't like it is that they raised seemingly more than they needed, and seemingly at a very low price, and it really, their statements really make you question why they couldn't have raised at a higher price, a smaller amount at a higher price, to just do facility 2 and expand the solar team. But that happened. The stock price is reflecting that. So let's see how are they progressing? How are we progressing with the core thesis here? So the core thesis for me is this. Everything else is kind of extra. Can they build something for 12 million that generates 50 to 60 million in annual profit? This is from my write-up that I released on December. So how are they progressing with proving that they can do this? Well, let's see what they say the facility 1 progress is. So they are, according to them, they are about finished spending 13 million for facility 1, which is a good sign. I mean, it's around their goal capex, their stated capex, which is one of their big advantages in the sector. So it's a good sign that they are claiming they are about finished spending that amount. So the capex budget wasn't much higher than anticipated. Also, they say they are right on schedule for commissioning in Q1, and for up and operating in Q2, they say they are right on schedule. And that they were fully funded for Site 2. This raise was for other reasons. But these are good things. And then Nevada gave them 900k in tax reduction, which is also a good sign when it comes to their facility 2 permitting in Nevada and stuff like that. And they, in connection with this abatement program, they will be investing over 12 million in capital investments in the first year of operation, which refers to the second facility they are building in Nevada. And if you're thinking about why they are saying 7 million in net Nevada tax revenues in 10 years, why is it so low considering their profits? It is because Nevada is a very low state tax, like state level taxes are very low in Nevada. So, and the corporate tax is a federal tax, but of course Comstock also has some tax losses to reduce that as well. Now, it's mostly good stuff with Site 1. It seems to be going according to plan. Now Site 2, they have identified it. They're going to file the permits as soon as next week, and this was like February 3rd they said this. So they should have filed those by now, and they said they're gonna order the equipment in March. And then basically they said they needed to get it up faster because they want to maintain their lead, extend their lead, winning market share, and the competition is probably going to come faster than we were originally anticipating. And this does seem to be the case, and we will get into that later. So they kind of need to take the lead right now. And they say because they already had the one facility, now the second facility is going to be easier permitting in Nevada. So if everything goes as planned, this should be commissioned late 26, early 27. I mean, it never, with these companies, never quite goes with their plan, it seems like. But if it goes, that would be the timeline. So this is that. Now economics. Now, of course, so this is kind of analysis of how they are kind of proving at this point their economics. So their old economics using the lower silver price well below 40 an ounce. That put their metal tailings at 125 per ton. Now add aluminium flakes at 125 per ton. They don't even count the glass pearls in this calculation. That would put the mineral and metal recoveries at 250 ton. Now this calculation is 100% utilization, which they say is not realistic. So, but at a realistic utilization of 90%, this would make 52.5 million annual profit, which would still be quite insane. Now, now they did new calculation, they adjusted for a higher silver price, and they are saying they are getting that amount. I mean, the basis for this, I assume, is their demo plant, because they are doing this right now at their demo plant. The smaller scale, they claim that they are getting at $60 an ounce, they're getting 375 per ton. Now add the aluminium and you get 500 per ton at $60 silver. So, and this calculation takes uses 90% utilization. So the realistic utilization, they say that their realistic full utilization is 90 to 95%. So that would make them 75 million annually at $60 silver. And right now silver is around 70 to $80. So it would be even more with that. And the tipping fee, the basis for this tipping fee is that they are right now getting consistently and steadily the equivalent of 500 ton tipping fee. But they did basically, somebody asked, what is this tipping fee? Is that going to go down, or what is it going to be in the future? So they basically can't say that exactly, of course, but it follows a standard sales process, and they don't think it's going to be a substantial number, although they expect some erosion. But of course, when it is a sales process, so if they have more competition, then one company comes in and says, okay, we can take it at this price, and other one companies, so that it drives, so that would drive prices down, of course. But in the future, there's going to be way more supply also, because of this avalanche, this tsunami, this tidal wave of old solar panels is coming. It's coming. So now, I would say there is a pretty I mean, assuming they're honest, they have a pretty solid reasoning for these amounts because they are getting those with their demo facility. Now the cost is kind of the big thing because obviously these costs seem ridiculously low given the revenue. So and they claim that that's all in, so that's Fortunato, that's their metals leader, so that is his salary is included, sales and marketing, accounting, everything is with 150, and the variable cost is only 3.5 to 4 million. So that means this thing has a fixed cost of about 11 to 11.5 million, and then variable cost very little. So that's kind of, I mean, it remains to be seen whether they can execute on that when the new bigger scale facility comes online. But if they can, it's going to be insane economics. Now, when would they reach profitability? Well, they need to get panels. So their situation is that they have 6,000 tons waiting, so they have some panels right away. And Corrado did this Spotify interview after these investor calls, so this is from that. And here he says that they have a very, very precise view of getting to about 25 a ton run rate. Although he doesn't say explicitly, he doesn't promise that they're gonna get that. So he says third quarter would be great, and they would be they would be happy if they would exit the year at 35 to 40,000 and exit 2027 running full at 90 to 95%. So we're not going to be getting these economics right immediately. So what would be the economics at these levels, right? So they say 20% utilization is profitable. This is what they always say. And this is the basis for that claim. It seems to be that if you have the lower silver price. So these calculations are all, this is the lower price, this is the higher silver price. So, and assuming the full costs. So let's say here they have 20% utilization at lower silver price. That would be 15 million of revenues. Now 15 million, now the costs at 20% utilization, the variable cost would be a bit lower side, so it would be slightly profitable here. But at current silver price, it should be profitable at 20%. Now if they can get to 25k run rate in Q2, like they say, they have a very precise view of that. At current silver prices, or they should be making over 10 million of profits. And year-end run rate, they should be making at current silver prices over 20 million of profits. So yeah, those are the calculations that we could be expecting, the run rates we could be expecting for this year. And it just puts into perspective if they can execute this, that even at like 25% utilization, the economics are basically quite insane if they can almost pay the full capex back in a year, almost at $60 silver at 25%. So I would say this whole thing, I mean, it remains to be seen when it gets commissioned, when it gets producing. I'm sure there can be all kinds of possible problems with the scale up. But at the moment, they are executing this core thesis. It hasn't broken. Now, let's see this refining thing.